Hello and welcome to the VRIC Media Channel, where our mission is to educate you on how to make money in the commodities sector. I'm your host, Ted Butler, and today I'm very glad to be joined by Peter Krauth, editor of the Silver Stock newsletter and author of the Amazon best-selling book, The Great Silver Bull. Peter, thanks for taking the time to talk with me.
Well, Ted, we've known each other for a while, and it's always a great chatting with you, and I'm glad to be here today.
As always, absolutely. So really, I just want to get straight into the thick of it with silver. So we last met in March in Toronto at the PDAC conference, and since then the silver price has risen quite considerably from about $23 to $31 as of today. In fact, I think you pointed this out on your Twitter, that silver has been the best performing asset year to date, excluding Bitcoin potentially, in a group that includes various government and corporate bonds, the Nasdaq, the S&P 500, gold. So naturally, I'm curious to hear about your thoughts about the reasons for this relative outperformance. And do you think it was, leadership from the gold price, strong industrial demand from the East, or the recognition that perhaps the exchanges are running out of silver? Which issue do you feel is to blame for the rise in the silver price recently?
I would say all of them to some degree. For sure, gold's been resilient. We know that gold's been, in fact, outstanding the last couple of years. There's been so much buying by central banks that there's been this sort of question about why gold stocks have not performed, but gold has. And I think that Adrian Day probably put it best actually was back at VRIC in January, from what I remember, and he was basically saying that the gold is strong because of central bank buying, and central banks are not buying gold stocks. So it makes sense for gold to be there, and you didn't have market conviction on the equity side, and so the stocks were lagging. Ultimately, I think that has caught up in terms of the silver price. And so we've seen silver just absolutely zoom since end of February. It's been tremendously strong, as you said, somewhere around $22, $23, and we've touched 32, back to about 31 now. And silver's been the best performing major global financial asset, as you say, excluding perhaps Bitcoin and the odd one or two others that we may have missed, but that's really quite impressive for an asset like that. And you mentioned a couple of other reasons. One of them being how the future exchanges are being drained. We see the ETFs being drained, and then we see this fourth year forecast by the Silver Institute, where they're expecting a 215 million ounce deficit again for this year. So that's really a structural deficit. I'd like to kind of point out, the silver market total supply between mining and recycling is 1 billion ounces a year. And so we're talking about a deficit that's over 20% of the entire supply, both mining and recycling combined. That's tremendous. And it's going to be the fourth year in a row of 100 plus million ounces. So 2021 was about, let's call it 1 million ounces. 2022 was crazy at 263 million ounce deficit. Last year was 184 or so million ounces, and the forecast for this year is 215 million ounces. Wow. The Silver Institute thought we were going to be somewhere around, I think it was 140 million ounce deficit, and I said that's too low, and that we would be in the 180 to 190 million ounces. Well, we're right in between, 184 million ounces, and I think they'll have underestimated this year's deficit as well. Time will tell.
Yeah, absolutely. And this is the thing, is widening the deficit. And before we come back to the supply side, I did want to sort of get on the demand side of things, because there seems to be this narrative being peddled at the moment by some analysts, and perhaps they have some credibility for it, that silver is losing its monetary component. And actually what we've been observing in the markets of the last few months even is that silver has been, in fact, following gold. And it's evidence of the fact that this monetary component is still existing. So I kind of want to talk to you about a few monetary events that are coming up, as you well know, with that could affect silver. So, as you know, the Fed is targeting just one interest rate cut this year, which would likely come in December. And then, 76% of 3 and 4 market participants from the Fed Watch CME are expecting, one rate cut to come in September and then potentially more in the rest of the year. So my first question to you is when do you think the Fed will actually cut rates? And secondly, do you expect silver will respond as positively as it did in the last 3 rate cutting cycles, where it averaged, I think, between 300 and 400%? I think you pointed that out.
Yeah. So I do think that we're going to get probably at least 1, possibly 2 cuts before the election, depending on the timings of Fed meetings and so on. So I'm going to say I think odds are good for at least 1. The Fed wants to probably look like it's doing what it can to quote unquote stay out of the way of an election and not, sort
and be apolitical, yeah.
Right, and not be overly restrictive or overly accommodating. So at least a trend towards, kind of pulling things back in terms of rates. But I do think that we're going to get, as you said, I've pointed out before, and as you've written about, how if you look at the last 3 times that the Fed engaged in rate cutting cycles, silver did extremely well, and it followed gold. And I'm going to get back to a point that you mentioned earlier, but silver returned over 400% on average if you look at the last 3 rate cutting cycles. That is just fantastic. Phenomenal. And I think that people need to prepare for that. And yes, it'll come with some volatility, but if silver can do that, they need to consider what silver stocks can do, because they're going to leverage that probably at least 2 to 1 and probably well beyond it. So the opportunity is going to present itself. It's coming. I think we need to gear up for it. People need to do some research and position themselves, and also understand themselves in terms of knowing themselves in terms of their risk tolerance. But it's definitely something that they're going to want to take advantage of. In terms of what you said earlier about how it's some are saying that it's losing its monetary component. So I like what you pointed out, the fact that it having followed gold and really shot up in the first half of this year, to me, suggests that it maintains that monetary aspect. I think it's not so much that it's losing it. I think it's that the industrial component of silver is growing versus, in other words, the monetary aspect is probably more or less staying what it has been for decades. I think it's the industrial component that's sort of creeping up on it and taking some of the overall share of the pie.
Yeah, proportionally bigger. Yeah.
Exactly. So if you look at the numbers, I think that industrially we're looking at probably around 60% now of silver going to industrial uses, and 40 to some kind of monetary demand. And I personally combine, the buying of investment silver through bars and coins, along with jewelry and silverware, and I consider those 3 to be overall loosely investment demand. So what I would say is, anyone who says, well, okay, so investment demand is now not as important, I would actually flip the table on that and say, if it has reduced its importance in the overall pie, or its share of the overall pie, when it does kick in, there's less silver available for investment demand, and therefore it could leverage up its effect. In other words, the less silver available, if people pile into buying silver for investment purposes and there's less available, they're going to have to bid it up.
Yeah. Absolutely.
So we could just really see it explode. And again, I just think that it has a place in everyone's portfolio. It's a question of proportion.
Absolutely, yeah, completely agree. And
quick break here. This episode is brought to you by West Red Lake Gold Mines. Now, if you know nothing about West Red Lake Gold Mines, let me tell you one thing. This company was founded on the back of a transaction where they purchased the Madsen mine in northwestern Ontario in an area called the Red Lake Gold District, which to date has produced around 30 million ounces of gold from some of the richest gold deposits in the world. Now, what they paid for this mine versus what they got has led legendary mining entrepreneur Frank Giustra to call this transaction the deal of the decade. And Bob Moriarty, founder of 321 Gold, was recently on my show calling West Red Lake Gold Mines one of the 2 most undervalued gold companies in Canada. If you're curious why these individuals are so excited about West Red Lake Gold Mines. Hit the link below to learn more. Now back to the episode.
Now that I guess we've established that monetary theme is still consistent, I want to ask you about the US dollar. More specifically, it's quite well understood that, a weaker US dollar causes investors to gravitate to tangible real assets that have a means of protecting your purchasing power, i.e. gold and silver. In this sense, are you observing any reasons why the US dollar may weaken sooner than it's expected? Obviously, it's been relatively strong versus other currencies in the last few months, but I'm talking things like the end of the petrodollar system, the rise of the BRICS, the upcoming election. Do you think there are any headwinds towards the US dollar that could play into the hands of gold and silver, almost as like a de-dollarization play, if you see what I mean?
Absolutely. And I mean, if, anyone who has read my book knows that, the subtitle is crush inflation and profit as the dollar dies. And so certainly that's my outlook. And so if in the near term, I would say that the bigger catalyst is going to be rate cuts. And I think that, this sort of vacillating that we've seen in the dollar index in the last few months has been the dollar index moving with expectations of rate cuts. We have seen it kind of back off a little bit in the last week or two. And I think that that's because we're seeing unemployment rise, for example. We're seeing the approaching election. We're seeing the Fed starting to sound, even if it's just slightly more dovish. And so near term, I think that yes, we're going to start to see the dollar and the dollar index start to weaken. It's not going to be a crash, I don't think necessarily. And then longer term, certainly, and as I've discussed in the book, I think that, and as you mentioned rightly so earlier, that this is a longer term play, and clearly with the U.S. having used the dollar as weaponized the dollar really by freezing Russian assets. And now actually looking at using Russian assets to support Ukraine. The rest of the world is looking at this. Sovereign investors, sovereign wealth funds, central banks, they're looking at this and saying, I don't want to get caught like that. What options do I have? And the dollar as the world's reserve currency, even if it's a de facto world reserve currency, has a lot of people on edge, and they're feeling that I maybe own too many dollars and there are other options for me, and maybe I should go for the ultimate safe haven, and that's gold and silver, precious metals. So I think longer term we are moving towards that. You mentioned petrodollar. You've got Saudi Arabia now that has entered as a member of the BRICS nations, and so it's certainly my understanding is that it's not sort of a done deal in terms of de-dollarizing, but they're absolutely looking at accepting other currencies rather than the dollar for their oil. They themselves are looking to move away from oil for their own economy and to move towards renewable energies and to lower their carbon footprint. And then you've got other countries like China, Russia, Iran. They're all looking to trade with each other in other currencies other than the dollar. They just don't want to be boxed into being stuck with, trading in dollars and perhaps having too many dollars and being frozen out of being able to trade with others.
This is it's really that. It's this exorbitant privilege that the US dollar's had over these last few years. And it's come with this kind of bullying, macho, we can do what we want and we can enforce any implications on any country. And every country just had to say yes because of the strength of the US military and the economic powerhouse that it was. We're now seeing that start to change, and that creates a lot of monetary uncertainty, a lot of ambiguity in the macroeconomic picture. And something like gold and silver, which is, the very definition of stability and neutrality, I think you're absolutely right, could attract more buying from central banks and even the banks. I mean, I think it was Bank of America predicting $3,000 gold by the next 12 to 18 months.
That's right. I mean, it's impressive to see, large sort of mainstream kinds of banks put out this kind of research and these kinds of predictions. And I think it's very telling that when you see these kinds of institutions starting to recognize and realize and being willing to come out and say these kinds of things in a very public way, that it's going to become undeniable. In fact, in my opinion, when you see that kind of action.
Yeah, absolutely. Okay, so now that we've kind of covered the monetary side, let's shift it to the industrial side, which is obviously, like you say, the biggest portion of silver demand now. So if we start with solar, I was just thinking it would be great if you could summarize the historical and projected demand figures of the last few years, just to provide some context. And then as a follow-up to that, maybe talk more about China and how seriously do you take this narrative that China is going to have this economic downturn and somehow this is going to cause silver's solar demand to miraculously disappear. And that's an idea that I don't agree with, for the record, but I'll just be interested to hear you push back on that.
Sure. So, if you look at, say, 10 years ago, about 60 million ounces went to solar. If you look at just 4 years ago, 90 million ounces of silver annually went to solar. Last year it was 193 million ounces. This year it's forecast at 230 million ounces. So it's essentially, in the last, say, 3 or 4 years, it's up 2.5 times the amount of silver that's gone to solar. So it's absolutely exploded. There was a forecast that the growth of solar would be somewhere around, I think it was around 20% or so year over year from 2022 to 2023. It turns out that it was 64% growth of the amount of silver that went to solar. And so the Silver Institute is forecasting that we're going to see a 20% growth again this year. And so, what some people are saying is that, you've seen this thing called thrifting, where naturally the manufacturers of solar panels will look for ways to cut costs, and they'll use, in one instance at least, they'll look to use less silver. It's a considerable portion of the cost to manufacture a panel. And what we've seen is that the amount of silver in each panel is actually plateaued. It's been dropping for 10 years and it's sort of flatlining now. I think we're on the verge of seeing that start to spike up. And the reason for it is, we've talked about this before, but we're shifting really from what we call the standard or the incumbent technologies, which is PERC, exactly. And we're shifting to TOPCon and HJT. Now, TOPCon takes up to 50% more silver per solar panel. HJT takes up to 150% more silver per panel. So we are not only growing the amount of solar panels that we're producing, but we're also shifting to technologies that require more silver per panel. So It's almost like you've got this exponential growth in silver demand going to solar. And so even if you had solar production flatline for whatever reason, economic downturn, a move away temporarily from this green transition, whatever it might be, you still have this shift towards higher efficiency in solar panels. And so that, I believe, if nothing else, will help to maintain a growth in the demand of silver for solar panels, even if the rate, slows somewhat. So, silver that goes into solar panels for now is not recuperable. It may be one day, but for all intents and purposes, it's not recuperable. So you don't see that silver ever again. It just ends up ultimately maybe 20, 25 years from now in some waste dump or something. So that's silver that you just don't have access to anymore. And that takes away from silver for other purposes, including investment. And so it's just very bullish for not only the industrial side, but the investment side as well.
Absolutely, yeah. And especially if, China, even if it does have an economic downturn, this idea that other countries won't be there to pick up the baton is a fallacy. And, like Latin America, as we've spoken about before, 65% of capacity in the pre-construction phase. I think Reuters are expecting a 5-fold increase in Latin America's solar capacity in the next few years. So, and then of course there's India as well, as we've spoken about before. This Adani Green Energy, world's largest renewable energy plant in India, has just been unveiled, 5 times the size of Paris, 500 square kilometers of just solar. And I think there are other energy sources as well, but it's mostly solar.
Right.
And of course, India are importing, 70 million ounces of silver in February alone. So I as you know, we're both on the same page with the industrial demand side, but it does frustrate me when I see this narrative about China and they're going to have an economic downturn. The solar demand going to collapse. It's not the be all and end all. And even then, President Xi's muddling through somehow by
That's right.
doubling down on manufacturing. And anyway, it's very easy to get to introspective about solar demand. There are other industrial demand components of silver. Whether it's EVs, semiconductors, hydrogen, nuclear, medical, or any other categories, which non-solar silver demand category do you think will be the most important for the years to come? And do you foresee any of these ever overtaking solar, or do you think solar will just have a lead for the years to come?
Yeah, so let's start with the sort of last part of it. I do think that solar will continue to hold the lead for years to come, but I think what is maybe being a little bit underestimated is the AI aspect of influence on silver in two ways. One is that it takes a multiple of energy to do an AI search versus a standard Google search. So that's the first thing. So that energy has to come from somewhere. And then when you look at what is happening with data centers,
yes,
just mushrooming all over. And there are, in many cases, there's legislation that is obliging many of them to use renewable energy. So AI could just help fuel even higher solar panel requirements, sort of indirectly. So, in terms of the microchips and all of that for AI itself, that's one source of demand potentially for silver. But then the energy to get to run AI is likely to also shift towards requiring, as I say, green energy, and that being supported by mostly sun and wind as well. So I think AI is really going to be a sector to watch. And I've read some interesting notes in the actually right out of the latest World Silver Survey from the Silver Institute for 2024, and they talk about these networks. These are like nanowires, silver nanowires, and these are multiple times faster than in terms of transferring data and energy and so on. And these networks, they actually can reroute and they can learn automatically. So there's just some fascinating stuff that's coming out of sort of really, really high tech applications for silver, and that's going to lead to all kinds of things in terms of demand that we can't even fathom right now.
This is it, and it's so versatile with its conductivity and its utility in so many applications. I think that's the thing. There may be another applications that's discovered between now and the next 5 years that exploits the existing supply-demand deficit. And you touched on that at the beginning, but I wonder if it would be beneficial just to go over it as we sort of go into the supply side here. How many million ounces is the supply deficit right now? And actually, how many years do you think it will be before mine production and recycling, as you touched on before, can actually be incentivized to close the gap, have a high enough price to do so? I think it was TD Securities that said yes, the LBMA flow would take another 2 years, the same demand of compound annual growth rate to be consumed. I butchered that a bit, but you know what I'm talking about.
Absolutely. I saw that, and I had actually come to that same conclusion before reading their report, that I saw, at the current pace, anywhere from 12 to 24 months before futures exchanges and silver ETFs are drained of silver. And so for a little bit of perspective, as I was saying earlier, the total supply is 1 billion ounces a year. Total demand is 1.2 billion ounces a year. So it's 20% over the current supply. And so if you ask yourself, which I had up until a few months back, how is it possible that the silver price looked like it was capped, so to speak, not doing a lot, not going really much higher than $28 or $30? How is this possible if you have these ongoing structural deficits? Well, by doing the research, I saw ultimately that the large consumers were getting their silver somewhere, and that's what was explained by these draining inventories at the futures exchanges, in the ETFs. So they were able to access silver that was already above ground, that had already been produced and mined. It was just sitting in inventories. So you don't need to bid it up. You just need to go out and buy it, which is what they did. So they went out and bought it at prevailing prices, have been drawing down on those inventories. But now if you look at the deficits that have been shown by the Silver Institute, we had, like I said, about 100 million ounces back in 2021. And then above 200 million or somewhere at least around or above 200 million ounces for the last 3 years, including this year. So if you add up these, including this year, these 4 years of deficit, you're somewhere around 700 million ounces. That's 70% of 1 year's production deficit, cumulative deficit over the last 4 years. That's tremendous. And as I say, I don't feel that that can go on for all that long. That's why I think that, when the market, at least in part, saw what was happening with the futures exchanges and ETFs, seeing their inventories drain, saw the forecast for a fourth year from the Silver Institute that we're going to be at near all-time high deficits once again. I think that's when there was a reckoning by the market that, okay, this is real. We are really in a structural deficit for silver. We do not have enough. And then this is all compounded by how silver is produced. I mean, if you put recycling aside for a moment, and recycling has actually plateaued around 175 or so.
It's been flat for years, hasn't it? Yeah.
It's been flat for the last 5 years. It's only up slightly over the prior 5 years. Mined silver actually peaked in 2016 at around 900 million ounces. This year, we're expected to be around 820 million ounces. That's actually down from last year. Believe it or not, in a deficit situation for the last 4 years, mine supply is forecast to be down from last year, which was about 835 million ounces. So, if you put all this together and then you layer on top of it the fact that only about 25 to 30% of mined silver actually comes from primary silver mines. About 75% of silver comes from mining other metals. We're talking about gold, copper, lead, and zinc. So if there is an economic slowdown and it does affect especially base metals, I wouldn't really expect it to affect gold all that much. In fact, it probably would help gold. But if there's a slowdown in base metals demand, you're going to have a lot less silver output from mining if the production of the base metals is pared back, no matter what happens to the silver price. So you could have silver at $40 or $50 in a scenario where you've got economic challenges, and for that reason you've got a slowdown in production or a reversal in production of base metals. And despite a higher silver price, you're actually getting less silver onto the market because those producers have pared back. So you've just got this inelastic supply response to price from silver that would just exacerbate an even higher silver price. So these are things that people need to understand. It's a very quirky market, but very beneficial for people who understand it. So do your research, look at the market, understand your risk tolerance, and take a position. I think it makes sense to hold some physical and to some extent be involved in the equities, whether it's through an ETF or individual equities, and then you've got a whole risk spectrum within that.
Absolutely, yeah. So I just wanted to touch on the thing you mentioned there about the exchanges as well, just reminding me of something. We had a call, I think, a couple of months ago, I think it was in May, discussing, what a silver squeeze situation would look like and what features would be prevalent within that. And I just think, we talk about the TD Securities predictions earlier 2 years, that's for the LBMA. How close do you think we are to this sort of silver squeeze moment, and what would it look like?
Well, I mean, to put it in very simple terms, how close are we? I would say we're probably within at least or a minimum of maybe 9 to 12 months is when something like that could happen. It could be longer. We could be at 18 to 24 months, but I think somewhere in that range is very realistic or very possible. And what it might look like is that you've got some big silver consumer, industrial user especially, who has a long contract on a futures exchange and goes to the exchange, and the contract is maturing and says, okay, here's my contract. I'm entitled to take physical delivery. That's part of the terms. So I would like the silver. Here's where I want it delivered. And the exchange will look at its inventories and say, I'm sorry, it's not there. We're out of silver. And so force majeure, we're going to have to pay you out in cash. And they're going to say, no, I want the silver. I don't want the cash. I actually need the silver. And that's going to make headlines. And
well, that's it. And if I remember correctly, that's what you said. It would be if the news of that scarcity reaches the market, that's when the sort of panic would set in. And that's when the premiums would arise too, no?
Absolutely. And if people want to have, some idea of what can happen with premiums, I think that's a bit of a sideshow even, but when the COVID pandemic panic hit in early 2020, and then the silver squeeze came in early 2021, we had, in some places, I believe in India, for example, some people were paying up to 100% premiums over the spot price.
Wow, I didn't know that. Wow.
Yeah, absolutely. We had 50 to 75% in many cases. 40 was standard for months at a time. And if I remember right, in some instances in India, some people were paying up to 100% premiums. And I think that is not impossible again. And this would be in a scenario where, it's almost much more serious and more fundamental in terms of supply-demand dynamics. These were more temporary issues, and yet the imbalances lasted for months. I mean, people wanted to get their hands on physical silver when COVID hit. That was one instance because, there were lockdowns everywhere. People were not able to go into work and, access, distribute, deliver, all the rest of it. So that was one instance. That was a little bit more of a fundamental kind of thing, or at least more sustained. And then when you had the silver squeeze, that was more of a temporary thing. And I had told my subscribers at the time, I said, this is really fun to see, 3 times normal trading volumes on your stocks and seeing them up, 50, 60, 80% in a matter of, say, 3 days. But don't expect this to last because, this is a bit of a meme. This is not a fundamental driver. And sure enough, within a matter of weeks or months, everything had kind of dialed back, and we were even in a bit of a bear for as much as about a year and a half, 2 years after that, until things really took off. Bottomed in October, I would say, of last year. I think silver was right around maybe $18, but then the real bottom came in at the end of February this year, around $22. Yeah. So as I say, that was a bit of a sideshow. Those 2 previous instances, if you get a big consumer of silver, look to take delivery of, I don't know, it could be 5 million ounces, could be even more. And they're, sorry, we just don't have it. The sparks will fly. The sparks will absolutely fly. And, here's a little anecdote. There's a, one of the larger pure silver producers out there, the company president told me this back at PDAC when we were together the last time. He told me, he said, look, we sell half our production to the West We sell the other half to China, and the Chinese buyers are chomping at the bit to get their hands on the silver. That was a very big clue to me at the time. This was early March, and right, in hindsight, right after silver bottomed, he was saying that they are prepared to pay up to $4 more per ounce above spot. And they're prepared to pay for their silver 2 weeks in advance to get their hands on that silver. So they absolutely wanted it. They needed it at any cost practically. And that was a very, very, very big clue that the market is extremely tight. They saw it. He imparted that to me. And this just made me more confident at the time that we were at the beginning of a new rally.
Yeah, no, that's very, very interesting, especially about the premiums. Okay, so we get it. The market's tight. It has been. The price is poised to rise further, and it has been for what feels like a long time. I mean, I've only been doing this for a couple of years, but I understand the frustration of people who been waiting all this time. But this is the thing. I think the moment at which like your patience is wear one that thin, and you leave after all that time, that's probably where we were at with uranium like a few years ago. This sort of continuous years of supply deficits, and it's not seemed to be incubating into the price. But in terms of how far you expect the silver price to go, you talk about this in your book, and you use technical analysis to justify. You say $300 silver. When do you think we will reach this point, and where do you think we'll be price-wise by the end of the year? I personally think sort of $35 is a good conservative ballpark dollar amount, but what are your thoughts on that?
So I actually agree with your forecast for silver for the end of this year. I think 35 is realistic. I think that we're going to see gold probably somewhere around the $2,600-$2,700 range, and I think that will pull silver up along with it. Perhaps silver could go even higher, but I think realistically to look for about the $35 level by the end of this year is quite realistic. Now, longer term, yes, I've had a forecast of $300, and I was hesitant to put that out there because I thought, people are going to think, he's just being sensational, he's just being crazy, and I've seen much higher forecasts in the last year, and so it makes me a lot more confident of my forecast, which I put out 2 years ago, actually, when the book came out, and absolutely. So I justify that in a few ways in the book. I think I gave about 3 or 4 different examples, but the biggest ones are at least through I think technical analysis. The biggest ones are the gold silver ratio, and so I tried to be impartial about it. I went and I looked at the when the ratio bottomed, meaning silver bought the most gold at what point in time. So that point in time was in 1980 when silver peaked around $50 and gold was around $850. So the ratio bottomed at 15-1, meaning it took 15 ounces of silver to buy 1 ounce of gold. And so I thought, look, let's be a little bit more conservative. My long-term forecast is actually higher now for gold, but I've been relatively conservative, I think, but for years I've been saying $5,000 on gold would be the peak. I think we're going to do that at the very least. So if you do even half of my 15-1 ratio, if you do a 30-1, meaning it would take 30 ounces of silver to buy an ounce of gold. So if gold is at $5,000, 15-1 gives you, I think it's $333 silver. So that's close to 300. Let me just cut that and give a round number. I think it's silly when you're doing these long-term forecasts to be specific at all, because that's just ridiculous. You can't be. You're guessing anyways. And then another really good indicator is silver to the average home price. So if my memory serves me right, that ratio also bottomed in 1980. And so it took I believe it was around 1,400 or 1,500 ounces of silver in 1980 to buy the average US home. So if you look at doing this going forward, well, I'm taking, I don't know where US house prices will be in 5 or 10 years, but if I take current US house prices, the average is about $500,000 US. And if you did a 15-to-1 ratio, that again brought you to somewhere a little over $300 silver. So there was a Dow to silver ratio. There were a couple of other ratios that I looked at, technical indicators. And each time I did this research, this analysis, I always got to somewhere between about $280 and $330 silver price based on the other asset and the ratio. So I thought to myself, that's a bit of a sign. I'm always coming back somewhere around $300, and I'm not saying silver is going to $300 and it's going to stay there. And it always depends on context, because who knows what inflation will be like? Who knows how long exactly it will take to get there? But let's say in today's kind of context, if you got to $300 silver, it would wreak havoc on all kinds of industries that depend on silver, right? It would make products a lot more expensive. It would just be unsustainable. So, but in a future context where everything perhaps costs a lot more and silver is at $300, even if it's exceedingly overpriced at that point because of a mania phase, it's not unrealistic that it would reach that peak, eventually, dial back and come back down to somewhere more realistic. Perhaps realistic at that point would be $100 or $150. I don't know.
That's the thing, really, isn't it? It doesn't need to go to 300 necessarily for the return to be worthwhile.
Right. Absolutely.
Even $100 would be a fantastic investment, for a speculation, supposedly. I mean, we wrote about this. I wrote about this silver chapter in the Ingolby Trust Report. We really looked into, the gold silver ratio and what the historical median dating back to 1800 was, and that's 30-to-1, so 30-to-1 gold silver ratio. And what we found was that at that ratio, an $80 silver price is equivalent to $2,400 gold. So if you sort of extrapolate, double that, that's 2,400 gold price to 4,800, which I think is a good projection for the next few years. You're talking 160 silver.
Exactly.
And I'd be very happy with $160 silver. So this is the thing, like, I think some people often get too caught up in the lofty heights of $800, $1,000. It doesn't matter. It doesn't need to go that far. And actually, it's so undervalued when you look at the 1980 highs. I think we wrote about this as well, that silver is literally the only metal not to have surpassed its 1980 highs in a group that includes gold, copper, lead, nickel, zinc, tin, iron, platinum, palladium, rhodium, all these metals, and silver is still yet to go beyond. And that's why it's such a deep value play. And ultimately, what I want to kind of conclude with is how this makes silver mining companies such a lucrative and attractive opportunity right now, especially as we're on the brink of Q2 earnings season. What are you expecting from these companies? And do you think that the free cash flows will be so impressive that Wall Street potentially takes a serious interest in silver miners and gold miners for that matter?
Yeah, well, interestingly enough that you say that for gold miners, because I do think that you're right. Q2 numbers are going to be impressive. I think that the market is underestimating what the profits are going to look like, and that translates over to silver as well. And silver is a lot of these silver miners have had pretty narrow profit margins, if any, in some cases. And so the higher silver price just leverages the gain, the bottom line that much more when your profit margins are thin, and then you get this bump up in the price of the metal. The effect, the leverage effect on the percentage increase in your profits is that much more for a company whose profits are narrow versus ones whose profits are already pretty thick. So, there was one great example back in, I believe it was in May, when you had Endeavour Silver had reported their Q1 earnings. Well, Endeavour Silver is about $1 billion market cap, or it was back in May. This one day in early May, and they reported their Q1 numbers, and this $1 billion market cap company added 20% to its market cap in a matter of a few hours, and that was because I think that, as you said, that this is a company that trades on the New York Stock Exchange. They have big volumes. You can be sure that they're in numerous ETFs, they're in numerous funds. And so the previous couple of quarters, they had slightly underperformed. And I think that a number of large investors and funds were kind of watching them, knew that the silver price was now higher, and that would translate. And then when they reported that Q1, they had the go ahead that they needed to say, okay, this has translated to higher profits. We have the proof of it now, and so they decided to pile in, and it just exploded. That to me is just tremendous for $1 billion market cap company to be up 20% in one day, and I think that's just a sign of what's to come.
Yeah.
And if you look at what the kinds of leverage that the juniors can have, it's potentially a multiple of that. And that's a bit of a different ball game, especially when you get into discoveries. But so there's different things that drive juniors to some extent, if they're not producers, if they're not junior producers. But this is a tremendous space to have some exposure to.
Absolutely, yeah, and I think an overlooked space as well. There are other metals that I did want to pick your brains about, and other commodities. Probably just running out short on time, but copper obviously in mind along with silver. Do you sort of have the same bullishness for copper? Probably not, given that you're the great silver bull. But does copper interest you? Would you, for the purposes of diversification, recommend an allocation to copper miners or copper and silver miners? Is that something you're looking at?
Yeah, I mean, copper is in some ways a little bit like silver, I think, or more so perhaps. Copper is a bit of the new oil because, all this electrification and green transition requires electricity, and copper is what is moving electricity. So, electrical grids around the world need massive upgrades. And we need these massive build outs. I talked earlier about AI and how data centers need way more power to help, obviously run them. So copper is, I don't follow it nearly as closely.
Of course, yeah.
Right. But from my understanding, we're facing serious deficits over the next years and decades in copper. It's absolutely one that I have and would want exposure to. I think it's a tremendous way. It's perhaps at the current stage, it's perhaps a little bit of a medium to longer term play. I'm less bullish in the near term because of risks of
recession.
Recession, etc. That could affect copper, for example. But if we look at uranium, for example, I mean, I think that silver is where uranium was a few years ago. I think you made a great analogy earlier. And it's funny because after uranium has started to move, this goes back about a year and a half, 2 years ago. I was on a webinar with Rick Rule and a couple of other people, and he was saying, before we started the call, he was saying, people are asking me, when's uranium going to move? And uranium had already gone from 25 to 50 roughly. And I said, well, Rick, tell them it did move. It moved last year. You missed the double. And they just feel like, well, what's ahead? Well, that's the whole point. You need to be in the market. You need to be contrarian. It's not easy. It's, it goes against the grain. It's a tough thing to be contrarian, but that's where the biggest money is. Be contrarian and be patient.
Mm-hmm. And Peter, this is absolutely right on the nail, because a lot of my generation, I'm sorry to say, they don't have the patience, partly because there's this kind of short-term gratification, social media, scrolling, whatever. I don't know what it is, but a lot of them seem to be chasing, whether it's day trading, momentum, all these tech stocks have been pumped.
Right.
Meme stock, GameStop. There's no really, is there a real value case other than this guy who's sitting on a Reddit? I don't want to be too
Sure.
derogatory towards him, because obviously he's done very well to build up a huge position in that company. But what is going on with the investment approach of people today? I truly believe that the deep value method is still the best method as far as generating a return with a secure margin of safety. The likes of Nvidia and all these tech stocks have so far to fall. Whereas the reason why I love these silver mining companies and gold mining companies, because they're so undervalued relative to what they should actually be worth. And that's a much more attractive proposition for me. But anyway, I'm going on a rant. But
I'd like to say, you brought up an interesting point about delayed gratification. I like to say that we've gone from delayed gratification to accelerated gratification. And I think that a lot of that, sadly enough, and it is clearly, one of the things I talk about in the book is it has a lot to do with currency debasement. I've got to say that, if I try to put myself in the shoes of a younger person today who, maybe, doesn't follow this as much, they see things going on around them. They may not be able to quite put their finger on it, but they do know, and they do understand that their currency is losing value relatively quickly. So it's this currency debasement, I think, that kind of permeates, people and the economy. And so they probably don't even realize what's going on, but it's the fact that their currencies are being debased. They're losing the ability to look farther ahead, because they're saying, what is the point of saving?
Yeah, so that's a fantastic point, Peter. And they're so the time horizon is short, and they think about the day to day. How can I survive today? Because
it's time preference. Exactly. Yeah. Absolutely. So I mean, I'm not making excuses for them, but I could see how they get to that point where they feel, I just need to make a buck right away.
Yeah.
Right? Because my buck is losing value. So I need to make more bucks as fast as I can. And that just permeates, culture, unfortunately. And it's very negative long term. And that's why we need to look to the things that help preserve buying power. And these, gold and silver are clearly where we have that potential.
Of course. No, that's a really interesting point. And lastly, as a bonus question, I noticed on the Twitter post that you did about silver being the best performing asset, there was a lot of pushback about, actually, no, it's Bitcoin.
Right.
What are your thoughts on Bitcoin right now? Obviously, it's taken a tumble over the last month or so, losing about $15,000, I think, from 71,000 to 56 the last time I checked. So what are your thoughts on the value proposition there? Do you think it's even worth an allocation or a speculation? We've spoken about it before.
Sure. I mean, if I look purely at what happens right around the times of halvings, which is what took place, if I'm not wrong, around end of April. Right? So I think that it got a little bit ahead of itself, partly because of the approvals of the ETFs. And I think it actually makes for a pretty good contrarian play right now. I'm not saying I'd be all in, but I think that because people expected to, quote unquote, run up when you hit this halving every 4 years, and that has not immediately been the case. Instead, we've had this pullback. I think that it's been a bit of buy the rumor, sell the news. Well, the news came, we had the halving. It's not like it was unexpected or anything, but they've sold the news. So I think that this is, in my view, if I look sort of longer term, I think it's actually an opportunity. If somebody wanted to, allocate to that, I think that it would be a good time to probably at the very least start, adding into incrementally.
No, I think that's a really good point as well. And typically, from what I've observed, after a halving, 6 to 18 months after one, that typically when the price starts to see a bit of an uptick. And I think it's still worth a speculation. I still own some Bitcoin, but just it's really, for me, silver, gold, Bitcoin in that order at the moment. There were times when it was gold, silver, Bitcoin, but actually I think the risk reward on silver is much higher as a high beta play on gold. But I think we're gonna have to wrap it up there, Peter, because we are running out of time. But thanks for coming on. Brilliant conversation. First guest on the show, so thanks again for that. Before we go, do you just want to let the audience know a bit about maybe your new partnership with Jeff Clark and perhaps where they can find your links as well?
Absolutely. So first thing I want to say, Ted, is thank you. I'm honored to have been your first guest. I wish you, tremendous success with this endeavor. I'm sure you'll do a fantastic job as you have with everything else I've seen you partake in so far.
Thank you.
I have little doubt. And so, yeah, an interesting development for me on my end. Just about a month and a half, 2 months ago, I've partnered with Jeff Clark, who is the Gold Advisor. I was previously with Gwen Preston. She has essentially sold her newsletter to Jeff Clark. They've merged the letters into one. That's called a Gold Advisor. Sorry, Pay Dirt Prospector. So Jeff has 2 letters. He's got a free letter called the Gold Advisor, and he's got a paid newsletter called Pay Dirt Prospector. And so that has been merged with Gwen's previously known Maven letter. So I was with Gwen. I've moved over and partnered with Jeff. So as far as everything goes for my subscribers and what they see and what they get from me, that has actually all stayed the same. The only difference is that you'll see my work on part of the Gold Advisor website as part of that portal, so to speak. You can find me at silverstockinvestor.com. You'll certainly find everything out about my newsletter there. And as you mentioned, and as I talked about a couple of times in the last half hour or so, published the book, The Great Silver Bull, which is basically an overview of what I consider a generational opportunity in the silver market. And if you want more of what I call a real-time tracking of what's going on in silver and the opportunities there, that would make sense in that case to follow my newsletter, silverstockinvestor.com, which I publish bi-monthly. I'm active on Twitter. I'm on LinkedIn, so you can certainly follow me on Twitter at Peter_Krauth. And I'm looking forward to the next time to catch up with you, Ted, like this, and chat more about silver.
Absolutely, Peter. It's always a pleasure, and I'm sure we can put the links in the description below. But yeah, thanks for coming on, and have a great day. We'll catch up again soon.
Same to you, Ted. All the best.